Hello and welcome to another episode of the podcast. I am your host, Evan with the silent R, and today we're going to be talking about financial literacy. Let's get into it. All right, so today I'm here with two new guests, and they're here to give us some advice on financial literacy. We're going to start off with introductions. So tell us your name, your age, and what you do for a living. Let's start here.
My name is Philip Nanau. I'm a financial professional and a TTC employee. 32 years old, and I'm a Virgo, just in case you're wondering.
Sounds good. Let's go with the next person.
My name is Shay. I'm a licensed financial professional. My business is Finance for the Culture. I am 31, even though I don't look like it.
Very good. Do you two have anything you want to plug in, any business ventures, anything you want to promote? Let's start right here.
Definitely like to plug in my social media. You can contact me on Instagram. You can definitely contact me if you have any questions or if you want to connect with me. Definitely I'm on there.
Awesome.
Yes, so Finance for the Culture on Instagram.
For those who are new here on this podcast, we have discussions about modern life, careers, and lifestyle. If you enjoy the conversations you see here on the channel, as well as on Spotify, feel free to take this opportunity now, hit the subscribe button, help support us. It helps to motivate me to continue to make these videos for this podcast. A lot of people have truly enjoyed it. So thank you for those who are returning. For anyone new, 90% of the people who watch the channel are not subscribed. So please take the time to subscribe now while you have the chance. All right, so we're going to go ahead and get started with today's show. I'm super excited for this show, and I thought we'd start off a little bit differently today with a warm up. So here is what's going on in Toronto. So I'm going to share a piece of news with you too. I want to hear your perspective on this piece of news. And as finance gurus, I want you guys to tell us what you think is happening from your perspective and what we can be doing as Torontonians, as Canadians, to help to mitigate this challenge. Here's the first one. More than 50% of people in Canada are within $200 of not being able to pay their bills. Why do you think this is happening, and what should people be doing to manage their money? Let's start with you first, Shay.
Yes, so I'm actually very familiar with that statistic. It's actually 53%. I think the main reason would be lack of financial literacy, right? So a lot of us did not learn about money, how it works, financial education in school. And it did just get introduced into the school system September 2019, I believe. And the feedback that I'm getting on that financial literacy in schools is that it's not practical. So that's the biggest thing. You know, collectively, people don't know how money works. And so that affects their ability to manage their money. Or planning just means that, you know, people aren't thinking about the future, unfortunately, which is understandable. If you're young, you're trying to just live and enjoy life. But, you know, being in the field, we're seeing that you have to think about the future sooner because it does take time to build wealth. It does take time to save money. So the earlier you start, the better. What people can do, they can reach out to us because we do help people get in better financial positions. We focus on educating them and actually teaching them about these different products that can help them, you know, savings tools, that kind of stuff, getting out of debt, understanding life insurance, understanding investments. So I think that's the first step. If you are struggling and you don't know what you're doing, you need to seek help from people who actually know what they're doing.
Very good.
Yeah.
Go ahead, Philip.
I definitely agree with Shay. Also familiar with that statistic. I saw it on a MNP posting. I read the blog and it startled me. But then I had to rethink to another statistic, $1.83. And that is the debt to income ratio. Every dollar Canadians earn, there's $1.83 in debt that's attached to it. So I'm not surprised that Canadians don't have $200 at the end of the month or at the end of their pay cycle. You know, a lot of people are living paycheck to paycheck. I come from a priority neighborhood here in Toronto, Kingston Galloway. You know, there's not a lot of opportunities in terms of employment. And so, you know, people don't have the means to make the ends meet, and they really rely on credit. They really rely on food banks. There's a lot of situations going on in Toronto with regards to insolvencies just recently, the majority of insolvencies in 2022 were between millennials, age 18 to 34. Wow. Startling, right? And so you would think that it's at a older demographic, but it's affecting all Torontonians across the board. I think back to my early days when I went to York University, and 18 years old, freshman on campus, and they gave me a credit card for $500, and I didn't even know what to do with it. I didn't even know how to file taxes at the time. Wow. And it's just to let you know that they give credit out very easily. I mean, there's about like 3 to 4 money marts in my neighborhood alone. It's telling, right? Payday loans, cash advances, it's big, it's in your face, but there's not a lot of awareness. People don't want to talk about that because it's a hard topic to talk about debt. I'm of Jamaican and Cameroonian descent, and money sometimes is a taboo in the household. No one wants to talk about money. It's a hard conversation.
Why do you think that is?
It's honestly, it comes down to our own perception of money and debt. The relationship we have with debt is very toxic.
Yeah.
I mean, there's good and there's bad debt. People will get into debt to go on trips. People get into debt to go get surgeries, procedures, and a whole bunch of things that, and I'm not, getting at any gender and specifics because this is men and women alike, but it's just the relationship we have with it. But we won't take on certain debt to advance ourselves, i.e. education, reinvesting in ourselves. There's good debt out there, folks, and we just have to change. I know we're embarrassed to talk about our financial situation, but we all have debt, right? We all have debt.
I believe that there's a lot that we take on from our parents. And so if our parents never talked about money or, had certain views about money, we might adopt those as well. And, there is something to be said about the Caribbean culture and also maybe African culture as well, where, you kind of mind your business and you don't talk about certain things. But that's why we have so many people who are entering their adulthood and they have no idea about their financial situation because they've avoided it for so long. So it's really up to the next generation to open the door to talk about money because it's only going to get worse. We saw what happened over COVID, and who's to say that can't happen again? So it's really important that we start dropping or planting the seed to become more comfortable talking about money. And, it's not to say you have to put your whole business out there, but everyone should know what's going on in their own family. Because at the end of the day, we don't live forever. And responsibilities that other people were taking care of will fall on us. So if we don't know what's really going on with our parents, we will most likely end up with the burden. So we should really encourage those conversations.
I never thought about that.
And, just be open. Like, we're so open to talk about the most random things, but something so important like finance, we need to get more comfortable. And I think that really starts with also knowing ourselves, right? There's so many things that distract us from ourselves. When we become comfortable with ourselves and confident with ourselves, we're able to address certain things. And when we're able to address certain things, we inspire other people to address those things as well. So I would say if it means you're going to be the black sheep of the family because you want to talk about trying to build wealth for your family, so be it. You will find like-minded people who will help you on your journey.
So you both mentioned that it starts in the home and a lot of family-related challenges that we're having. So I want to pick your brain and get your perspective. I'm going to give you a scenario. So you both have a child. That child is now 18 years old. They're ready to be an adult. They have the opportunity now to get their first credit card. What advice would you give to your child about money, and what steps should they take in their younger years to be set up?
So what would I tell them? Okay. So there's a concept that we actually teach. Some people call it the birthday cake. Some people call it the financial house. And there's 4 major components in that house. So there's protection at the bottom, there's debt management, there's emergency fund, and there's investments. I would teach them and summarize that concept because that's the ideal way to build a financial house or build your, your finances. And, you're talking about a credit card in debt. So that would fall into the debt management. So just really educating them on the importance of building a house the right way, starting with the foundation and also implementing certain components so that you are setting yourself up for the best success. At 18, if they are about to go to post-secondary, I would warn them, as Philip said, that people are going to be standing on the corner telling them, here's a reward card, when it's actually a credit card. So letting them know, to know the signs. And they're still young. So to come to me if they're unsure about anything finance related, because I want to be able to guide them and share my own experiences and just, guide as much as I can.
When discussing credit cards, I would definitely tell my child a little bit about credit cards first and foremost, because it's a great tool. I mean, I have an Amex card right now. I got a lot of points on there that I'm about to redeem to go on a trip.
Light flex.
Nice.
Right.
That was a light flex.
And it's to remove the stigma from credit cards
For sure.
that
Right.
they're just a money grab. But I would tell them, I would ask them a question. I would ask them, the first thing to look at is what is the interest rate on that credit card before you use that, right? And then I'd ask them, what's the interest rate in your savings account? Because contrast is necessary in life. You can't have good without bad, right? So if I'm going to show you one side, I got to show you the other side.
Yep.
So if you got a credit card, average credit card right now is about 20% interest rate. Savings accounts under 1%. So it's to let you know, they make a lot more money on the money they lend than the money that they're paying in your savings account.
Savings.
So you'd want to be careful treading while you're using that card. Tread lightly when you use that card, because that debt will accumulate. It's only recently that they started putting on credit card statements the effects of paying minimum amounts.
Yes.
Because
Wow, they never put that on Actually, I've never read that on any credit card that I've ever owned.
look closely, the Financial Consumer Agency of Canada is fighting for consumers to bring awareness.
Wow.
Because there's a lack of it. The credit card companies do a great job in promoting. And on the other side, there's not a lot of awareness about these products that everyone's carrying in their pockets. These are weapons that we have in our pockets. They can cause serious damage in our life.
That's so true.
I mean, credit card debt, it's weighing down the economy right now.
For sure.
Torontonians they're using credit cards just to make ends meet. However, if you pay your credit card balance off before the end of the month, there is no interest being accrued on that debt. So you got to use it wisely. Don't use more than you can pay back, folks. And you got to manage your money. And so you got to look at the interest rate. You got to look at the effects, and you got to look at the type of credit card that you have. Is it a rewards card? Is it just a cash back? Does it offer you any benefits? You got to look at what can they do for you. Everyone's fighting for your money, and you should take note of that, because everybody wants your money.
Wow.
Yeah.
Well said. Well said. You two are teaching me a lot today. I'm looking forward to this episode. It's going to be a lot more great questions. So there's one more that I want to share with the two of you before we get into the question box. So here is the next news in Toronto. So Toronto minimum wage would have to hit $40 an hour for workers to be able to afford to live here. What do you, or maybe I should say, how do you feel about this? And what do you think that young people should be aspiring to do for a living to help to combat the inflation and the cost of living in Toronto? We'll start with you first.
That's a very good question. I would say you have to be competitive, right? I mean, if you're fresh out of college or university, you got your eyes on an entry-level position, keep looking, keep searching for another position. Maybe try applying for a position that you may not think you could get, because you don't know how that process is going to go. I will say that we have to think outside of the box. We have to look into different industries and different opportunities and speak to people, right? The $40 mark, it's pretty high, and it's above, I believe minimum wage right now is 15
and $40 an hour, just to put it in perspective, is about $80,000 to $85,000 a year.
Yeah, it's and Canadians, Torontonians should think about how can they find ways to supplement income. Right now, like I stated, I got two sources of income coming in. The days of having one source of income providing for your whole life, that's a thing of the past. Times change, technology change, and so is the job market. And so I know that not everybody has the flexibility to go out and work X amount of hours because they have responsibilities.
Yeah.
But you should try to look into ways where your time could be more appreciated, right? We see what's going on with the metro workers on strike right now. I just drove by my local metro and it's
Closed, eh?
It's closed. You know, I can't get those wedges that I like. It's
Those wedges, though.
it's a shame. And you see them, they stayed there and, you know, they weren't appreciated. And I'm not to say that Metro's not a great company. I love the store, but we have to try to look elsewhere because when a company lays you off, it's due to business needs. And so if you leave a company, it should also be due to business needs. I don't have any affinity to any brands anymore because I got to look at what's in it for me, right? With them.
Yeah,
Awesome.
I was going to say the same thing. Gone are the days of relying on a traditional job. You know, this is not a 9 to 5 bashing session. However, job security doesn't seem to exist anymore. I saw a post the other day. It said the only job security there is transferable skills and 6 months of emergency funds. So we have to be in control of our time and our income, and the way that we do that is to explore entrepreneurship or self-employment and eventually get to business ownership, right? So that's one way, but also the money that we are making, we have to make it work for us. So it can't just be sitting in our checkings account or a savings account. We have to make it work. We have to make it earn some money. There's a lot of, concepts, financial tools, accounts that are very important that we don't get taught about and we don't know how to use properly. And those are actually kind of gateways to mitigating this problem, right?
Can you give us an example?
Yeah. So as an employee, I'm not an employee anymore, but collectively employees get taxed the most. And so if we're trying to reduce our taxes, there's a couple of ways to do that. One would be become self-employed. The other way would be to use tax-free accounts. So accounts that allow your money to grow tax-free so that you don't have to pay taxes on the
Like a
profit.
TFSA?
TFSA, right.
Okay.
So a lot of people either don't know what that is or they have one and they're not using it properly. So they're putting money in there and they're taking it right back out. But you just allow your money to grow, and it's supposed to be a saving tool, right? And an investing tool. So those would be the solutions, really. You could say someone could work multiple jobs, but if you work a 9 to 5 and you go get another 9 to 5, you're still being taxed heavily, right? And then if we don't have extra time to do that, how are we going to get paid more? We either have to get another job, ask for a raise. We know how that goes. Or what was the other one? I have 3. So ask for a raise. You have to get another job, or you have to just work more hours, right? And that's, again, dependent on your boss. So we really have to start looking at what skills do I have? How can I monetize them? But also there are business opportunities that allow you to follow a system and make money, right? So whether that is what we do, right, in the financial services space, or that could be in marketing, or, beauty, whatever the case is. But we really have to take advantage of opportunities that allow us to become our own boss, right?
Very good. I hope you all are learning something and enjoying this great content I have for you today. If you're enjoying it so far, go ahead and hit the subscribe button. All right, we're going to get into the question box now. I've created some custom questions for the two of you today. I'll actually pick up the questions for you. I'll read them, and then we'll go back and forth. So one time you'll start first, the next time you'll start first. Alrighty, here we go with the first question. What advice do you have for freelancers or self-employed individuals to manage irregular income streams? Let's start with you first, Philip.
Well, first and foremost, I would definitely tell you to get a financial professional to assist you with your situation. That would probably be someone who could advise you on how to manage your money, where to put your money, where it's more advantageous to you. If you're going to get advice, you want to get advice from someone who is not only educated, but who is licensed, as we are licensed to provide that information to you.
That's a good point, actually.
I tried to get a financial advisor once, and it was a little bit of a struggle. And I know that there are barriers to do so. Advisor told me there's thresholds that your account must meet in order to qualify. And to be quite honest, most Torontonians may not qualify. Now, where I come in is I work with all demographics. There are no barriers to entry. I do sit down with a lot of individuals. Some might be on ODSP, fixed income. Some might be, freelance, self-employed. And, you want to look at your particular situation and get professional advice. There's a lot of people on YouTube right now who, they can be gurus. But, knowledge is one thing, but knowledge is only half the battle. If you don't have that practical information on how to apply it, it's pretty much useless, right? So you want to get someone who can not only provide you with the information, but how you can apply it and make use of it in light of your situation. So definitely get some professional help, and don't be afraid to reach out. Like I said, you could contact me on Instagram, do in-person meetings, virtual, however it's good for you.
Awesome.
Yeah, for sure. I just want to add on to that. So the traditional banking system is not made for the average person. If you ever go to the bank and you build a relationship with a financial advisor there, you actually have to have 6 figures in savings or cash, I believe. Or 6 figures in investments or 6 figures like in your bank account. So that's not realistic for the average Canadian. So what makes us unique is that we actually focus on the everyday Canadian, the average Canadian, who doesn't know how to get to that point, right? Because there's a huge gap. Bank loves helping the wealthy because they have money. But what about the people who want to be wealthy at some point and are being turned away because they're not, right? So it's definitely worth your while to reach out to either one of us, because we really do focus on, the struggling artist, the 9-to-5er, the average person who's just trying to manage their money better and get themselves in a better position. To answer that question, it is tricky when people aren't making consistent income. However, we do something called a financial needs analysis, which analyzes their specific situation and, sees how we can better manage their money. In that specific case, it's going to come down to managing their money, saving. The money that they are getting, where are they putting it? Are they putting it in an account that's going to actually grow? So managing expenses. Are they overpaying for a service? Are they paying too much, let's say, in rent? Do they have an opportunity to move back home? Are they paying for a phone that's like $200 a month that they really don't need to be paying for? How can we, organize their debt so that they can pay it off faster to free up money? So it really depends. But in that specific situation where income isn't consistent, managing expenses and spending habits are going to be super key.
Well said. So that was some good advice. Thank you both. Let's go ahead with the next question. So as a male and as a female in the finance industry, have you encountered any unique challenges or opportunities related to your gender? So I'll read that again. As a male or a female in the finance industry, have you encountered any unique challenges or opportunities related to your gender? Shay, I'm going to ask you to start first, because I know that people may say that women spend money a lot more and they're the largest owners of consumer debt. So if you can tell us any unique challenges or opportunities based on relation to gender, what has been your unique challenges or opportunities that you've gotten out of this? Do you find that you have more female clients versus male clients?
That's what I was going to say, yes. And I just want to say that, Mandam, you can chat with me too. I help everybody. But yes, and I think it's just a relatability factor as well, which I'm never going to take for granted, because I think it's a beautiful thing when Black women say it's amazing that I can talk to a Black woman about finance. I don't discriminate. I want to help everybody who comes to me as much as I can. And in regards to the spending, I think that in each gender, there's a lot of spending going on. But when it comes to the beauty, the consumerism around beauty, a lot of things are marketed towards women. It's the makeup, it's the nails, it's the hair, it's the clothes. There's so much. And I've definitely come across people who spend $200 every 2 weeks on their nails. Now, that's a lot of money for someone who doesn't have an emergency fund. So we definitely need to revisit priorities. It's not to say you cannot treat yourself and you can't prioritize self-care, but that's why the financial needs analysis is so important, because we're taking a big picture look at your situation, right? We're not just zoning in one area. So if I sit down with someone and they spend a lot of money on non-essentials, but their emergency fund isn't looking too great, or they have a lot of debt, you really got to create some balance there. So yeah, I definitely, actually, now that I think of it, comparing the two, I have not spoken to a lot of men who have a huge spending budget. They do go out and stuff, but it's not as wild as the women. The self-care part, they're like, oh, I cut my own hair. What? Or, yeah, I maybe spend a little money on this and that, but...
Do you find that it's because men are typically expected to provide resources, as for women are not? So they have more flexibility to spend on non-essentials?
Maybe. I definitely think there is that stereotype, and maybe men are more prone to prioritize like important stuff or like expenses. But I do come across women who have a lot of responsibilities. So there really is no one size fits all. Each case is so different. But collectively, yes, women spend a lot of money on the extracurriculars.
Pretty good.
Yeah.
I want to get Philip's take on this. So do you remember the question? You got this?
Yeah, I definitely.
Okay, feel free to chime into the one that I just mentioned as well.
In terms of men and women spending habits, I mean, on a dating perspective, I think back to my earlier days. I used to have my BBM going off, women messaging me, can I take them out to dinner? And I was being solicited to support certain habits, right? And that's just from my point of view. However, we've gotten to a point where I think we need to be honest about our situations, because if I come from a priority neighborhood and you come from a priority neighborhood, is anybody really more ahead of anybody? Right? We got to work together. Let's not act as if I got $1 million in the bank right now and I'm just sitting on it waiting to, But in terms of habits, there's a lot of pressure, because my first job, I think back to my first job at McDonald's, man. I was working at McDonald's in the block, and my first paycheck, I went to go buy new shoes. I spent my whole first paycheck on new shoes because I wanted to make sure I look good so that I could ask this girl that I really like to go out with me. That pressure, that social pressure. Wow. But then where does that really come from? The culture. Right. To be quite honest, we watch a lot of the music videos, and, you want to get the diamonds and the gold, but you want to fly before you can walk. And I think that's the problem in our community, is we try to get a lot of steps ahead of each other, but we haven't even gotten the basics. Like she said, you don't have an emergency fund, and you blowing thousands of dollars on Carabana weekend. You at every party, you buying bottles, you doing it all, but your bank account ain't got nothing. And this is for men and women alike, because to be quite honest, now women are very educated, and women occupy a lot of powerful positions and roles in society, and they are spending the bag right now. So we're seeing things come full circle in terms of men once upon a time were blowing money fast, and now the women are equally just making it rain, Yep. And so I can't say that I see it more in one gender than the other. What I will say is that I wish both demographics would start earlier. Men and women would start earlier, seeking financial advice earlier, because one thing I learned about investments is time in the market will beat time out the market. The way how compound interest works, you need to have your money invested for a long period of time. If you start too late, a lot of people now, they're coming. I had a workshop last week, and a lot of folks were approaching retirement, and they hadn't started saving yet, and they're now nervous about what their retirement is going to look like.
Really?
Wow.
A lot of people are on fixed income, and they don't have the means now to save. And I had a client on ODSP, and I was letting her know about, like she said, what accounts you can use, and I let her know about the RDSP account, something that a lot of
For those who don't know, that's the Registered Disability Savings Plan.
That's correct. A lot of people don't know how much money that Canada is pouring into them. Canada's giving, if I'm not mistaken, $70,000 worth of grants in those RESPs.
I just learned about one recently.
$20,000 in grants. They give you $1,000 for doing nothing but opening up the account every year for 20 years.
Wow.
And this lady almost slapped me when I told her this because she was so angry that her worker never informed her of all these years, the free money, the money that was hers, that she's no longer able to access. And so I want to encourage the men and the women of Toronto and all across Canada to get the advice early. Start now. The best time to save is now, because the money you save now can save you in the future. And that's a powerful message right there.
Well said, the both of you. I hope you are all enjoying this conversation, because I know I am. Let's continue the questions here. Here's the next one. So how do you approach investing, and what advice do you have for beginners looking to get into the investment world? Let's start with you first.
When I look at investing, I love investing because I've seen what a lack of investment in your community can do, right? I remember the year of the gun. They had so many programs right after that. The communities were, wafting everywhere. All the money was flowing. People were out of the streets. Really? But when you take these resources away from those programs, those community centers are lacking in funding. You're like, okay, I wish there was more investments there. And so now we realize that we have to, work in group economics, invest in ourselves, invest in our own communities, invest in our own peoples, and also invest in ourselves. We can no longer wait on the educational system to help us. We have to go out and take these steps. I mean, I have an accounting background. I went to school for accounting, and a lot of the things I learned after I graduated was baffling. I'm like, I spent thousands of dollars in an education and things I've learned on my own. I mean,
that's crazy.
There's a lot of things out there. People just think about the traditional way of doing things, but like I stated, times have changed. Okay. And so we have to now look to alternative sources of information and working with someone who's trusted, right? You want to work with someone who is licensed, someone who is reputable, right? And so you definitely want to start early with regards to investing. You definitely want to make sure.
So where should people invest? Like crypto, stocks, real estate? If I'm new to investing, where should I start first? And I'll ask you this question as well, but I just want to get your perspective. So where should I start first?
When you first start investing, you're going to want to definitely look for tax shelter.
Right? Shelter, what does that mean?
A lot of the great investors are looking for ways not to avoid tax, but to minimize tax by using tax-free savings accounts, RSPs. You can also use life insurance as a way to use your tax, right?
Really?
Because you got to look at it as the long game, right? Investing isn't short term. Before I started investing, I thought long term was 1 year. My longest relationship at one point was long year. I thought it was really long, right? Our perspective. But now I'm around people due to proximity who've educated me. Long term is 10 years plus. You got to think long term. When you sign these leases for these corporate buildings, it's 10-year leases they're signing. Wow. You got to be looking down the road. And now with financial planning, when you sit down with your financial professional, they will look at your short-term, medium-term, and long-term goals and find ways to minimize taxes all along that process, right? There's things that you can do for right now, and then you got to think ahead, right? Like with your RSP, you make a contribution, and about 40% of your contribution you receive back in a tax credit in that year after you made the contribution. Yeah. And then when you think down the line, when you pull out that money for your retirement, you're then taxed hopefully at a lower bracket, at a tax bracket. So you want to cover both bases. So you want to sit down with a financial professional who can help you work on your vision if you don't already have that, help you fine tune what your goals are, right? I always say, turn your dreams to goals, then turn your goals into plans.
Yeah.
Because if you fail to plan, you're planning to fail, folks. That's really what it is.
Well said. Go ahead, Shay.
Yeah, I'd like to take it back just a bit and ask you why you think we need to invest in the first place.
That's a good question. I think investing is the only way to become rich. I think that investing is a great way to plan for the future, especially if you plan to have a family. I think investing is a great way to have your money work for itself versus you working for the money.
Yeah, that's exactly what it is, right? We did briefly mention earlier that there's only so much money you can make at a 9 to 5 when you are heavily taxed. And so investing allows your money to work for you and basically compound, right? So that's the first step, because a lot of people, when they hear investing, there's a lot of like pushback because they just associate it with crypto. And we just want to make sure that people understand that investing is going to allow your money to work for you, right? So one thing that we do when people do ask us about investing, I'm sure I can speak for both of us because we both do the same thing. It's an investor profile questionnaire. So it's meant to determine what kind of investor you are. Everybody's different depending on their income, depending on the goals, depending on their situation. Their risk tolerance is going to be different. So when you see on Twitter that people are talking about they've made 6 figures in crypto, that's great, but is crypto for you? That's the question, right? There are people who are really afraid to lose money. So we're not going to put them into something super aggressive that might get them a higher return, but also maybe make them lose a lot of money. We have to invest in a way that makes sense for us. So I always say that investing is for everybody, but not every investment is for everybody, right? So determining what type of investor you are and then figuring out the investment vehicle that's going to help you get to your goal. And yes, short-term, mid-term, and long-term is definitely key. And yeah, I would tell people that the more they learn about investing, the more they understand it, the less afraid they'll be. Because more than 3 years ago, my friend who is an investing guru essentially was like, you need to start investing. And I'm like, that's a scam. It's giving old white man thing. Like, I don't know what that is. I don't want to do it. But I ended up taking a course that my other friend put together, and it was a, stocks 101, investing 101. And I was like, wow, I actually feel comfortable enough to buy my first stock. And I have not looked back since then. I've invested in real estate. I've invested in gold. I've invested in life insurance. I've invested in an RSP, TFSA, and it's all going to help me be more comfortable in the future. So we avoid things that we don't understand. So if you're curious about investing or you've invested before and you've lost money, please don't write it off, because saving is not going to get you to where you want to go. So please reach out to one of us and allow us to, explain the ins and outs and go through a questionnaire with you and really guide you, because that's the point, right? A financial advisor is supposed to guide you through your financial decisions and in a customized way.
I have a hot topic question for the both of you. I hope you two are ready.
Yeah.
So, if I come to a financial investor and I'm in a relationship, planning to potentially marry this person in the future, together we have some funds to invest, but I have the lion's share of the investment funds. Would you recommend that they invest with that partner, given that relationships typically sometimes fail? Would you advise that person to invest individually or with their partner? We'll start with you first.
I would say both. Everybody should have their own savings, their own emergency fund, their own investments. And then if you are with somebody, it would be great to invest together and you create, a goal, whether it's a short-term goal or maybe you have a joint emergency fund outside of your personal. Maybe you have some stocks together, or maybe you have, I don't know, maybe you go in on a project or a real estate project or a startup business or something together. But I definitely think that you should have your own stuff so that you're not falling on your face if anything happens or if it doesn't work out. And then I definitely see the beauty in coming together and investing in something towards a common goal. So again, it just really depends on the specific situation.
Okay. Go ahead, Philip.
I definitely agree with Shay in terms of, everybody needs to have their own. I mean, we all have 2 legs and we all should stand up straight, but I don't mind the idea of helping your partner out, because in life, I do believe that each one teach one. And sometimes everyone needs a little bit of encouragement or a little startup, right?
Yeah.
Definitely, I would say to invest in yourself first, and then, definitely work as a team, because two heads are better than one. Yeah.
Two of you are doing really well with these questions. You haven't skipped a beat. We're going to keep going. I am mindful of time. So right now it is 5 o'clock. I know you got to get going. Are you good for another 10 minutes?
Yes.
Cool. 10 minutes. Just let me know over there, okay? Here's the next question. For someone just starting out their financial journey, what are some fundamental principles they should focus on? So I know you both have spoken a little bit about this. So just give us a quick 1 or 2 sentences. What are some financial principles they should focus on when they're just getting started with their financial journey?
So
Go ahead.
firstly,
Perfect.
I would say if you're going to start working, you should always think about retirement first. I mean, that should be the first goal.
That's usually the last thing
That's
young
the
people
last
are
thing that
thinking
people ever
about.
think about is retirement. It's shame. And one thing that I like to do with my clients when I sit down with them, and I believe Shay also does this, is letting our clients know what their financial independence number is. Jay-Z eloquently put it on 444. Financial freedom is our only hope. And I really believe him when he said that.
Wow.
Money, like I said, the money you save today can save you tomorrow. And with your financial independence number, it'll let you know how much money you need to have to enjoy retirement.
So how do you calculate that? That is the question I know everyone is wondering. How do you calculate
You want to calculate that? And definitely hit me in my DMs, folks. I will definitely sit down with you and definitely help you know what that financial independence number looks like. And so you can start planning what your financial independence will look like and what your future can be. And then you can work backwards, right? I have a friend, he's an engineer, and his $40,000 education, one of the highlights he shared with me was working backwards. That's how engineers do things. And so as financial professionals, we like to work backwards too. So we like to get the final number you need and work backwards. How can you achieve this? So then you can start putting the proper steps in place so that you can achieve your financial goals and reach financial freedom.
Very good. Go ahead, Shay.
I like that. Yeah, for sure. A lot of people think about retirement last because, especially the younger folk, they don't think that they have to think about it right now. But again, like time will fly. Time will fly really, really fast, and we want to maximize the time that we do have, right? So if we're talking concepts or principles, I would say just starting out, everybody should know what they're bringing in on a monthly basis and what's going out. So cash flow, right? What disposable income do you have at the end of every month? You'd be surprised at how many people do not know this. They don't know how much they're getting paid. They don't know their monthly expenses. They don't know how much debt they have. They don't know the interest rates. They don't know the monthly payments. They have investments. They don't know how much they're contributing every month. So if you don't know if you're in a surplus or a deficit at the end of every month, that's a problem because you actually don't know if you can afford your life, right? So, that's, again, a part of the financial needs analysis that we do, which is complimentary, by the way. And it's, again, taking a big picture of your situation so that we can provide solutions. So if you have a lot of debt, we're going to help you figure that out. If you, don't have an emergency fund, we're going to let you know how much you should have based on your situation and how to start contributing to that to build it up, right? So definitely knowing if you have any money left over, so that you can allocate that to the right places. And then if you don't have enough money left over, you're in the negative, now we have to look at increasing your income. So that's really the starting point because that will really help us help you with next steps.
Very good. All right. Here's the next question. Can you share a personal finance mistake you made in the past and what you learned from it? I'll share one from mine, just so you two can know a little bit about my financial history. So when I was 18, 19 years old, I was working at Harvey's for my first job. And I was offered a credit card by Scotiabank. And the financial advisor I had at the time, she had her own personal agenda. And she signed me up for 4 credit cards by the time I was 19 years old. I had an Amex card, I had a cashback card, I had a standard card, and then I had my debit card. So I had 4 cards from Scotiabank, and of course she was getting commission off of how many credit cards that she produced. And I didn't go with my parents. I didn't have anyone who could advise me. I was thinking, I got credit cards, I got money.
Yeah.
So I started spending with all my cards, spreading out my expenses until I realized now I had to consolidate all this debt. because I had too much debt that I couldn't pay off, and I was just contributing to the minimum. So I felt like I was never getting out of debt. So I had to consolidate it. That was a mistake that I made, that I spent literally 5 years of my life recovering from, finally free of that, but because I got really bad advice from a financial advisor.
Right.
So that was a mistake that I made, and I learned that you don't need 4 credit cards. You're good with just one. What about the two of you? We'll start with Shay first.
A financial mistake? Okay. So, I had a phone bill go to collections and I ended up doing a settlement, which,
With a phone bill.
yeah, so I got to over $1,000. So typically when there's 3 months of no payment, accounts will go into collections. And my phone bill got racked up. I was afraid to tell my parents about it. And then eventually I was like, okay, well, it's in collections now and I need help. So I asked them to help me out, and the debt collectors company suggested a settlement. So I did that. It was like 1,500. They said pay 1,010 or whatever. So we did that. And then years later, I get a call being like, you owe $1,000 on this account. I was like, we went through this. Like, what is happening? So this is not to say don't do settlements. You should definitely get advice about that. However, I definitely would have asked my parents for help sooner. So I would have asked them to help me pay the monthly phone bill instead of waiting to get them to help me with the settlement, because of course that negatively impacted my credit score and all of that stuff. So yeah, definitely pay attention to your phone bills, and it's better off borrowing money and asking for help to pay for bills than getting it, having it go to collections, because it does negatively impact your score. And once things go into collections, it's be very ruthless. Like, your accounts get sold around for pennies on the dollar, and accounts can accidentally get reopened even if you paid them off. So if you don't understand the debt collection world, which I actually do because I was a debt collector at one point, you could actually get coerced into paying again. So just avoid collections as much as you can. And if you can't, seek advice and, read the fine print and ask as many questions as you can.
Awesome.
Yeah.
Correct.
I will say definitely, as a man from Toronto, you got to watch 2 things: your criminal record and your credit report. Okay? So like I said, I was in uni 18, got my first credit card, second credit card at 19, and I was in debt collections at 20.
Wow.
Just like that. It was the domino effect. I didn't know what I was doing, and I thought I was the flyest kid on the block. Like I said, I didn't care. I was talking to I got really bad advice. I didn't even have a financial advisor. You're lucky. I just had, them on the block who didn't really know too much about the finances, because they told me, you ever see a debt collector in the hood? I said, no. He said, don't pay that credit card bill. They ain't coming for that. So I thought, I'm not going to pay this Visa bill. We going to let this shit fly. And subsequently, I went to the CIBC bank and tried to go pull out some money. Money's gone. I'm like, what the hell is going on? I got robbed. So I go to the teller, and she said, oh, Visa took the money. I'm like, what do you mean Visa took the money?
Wild.
People don't know that the credit company can take money from your bank account if you owe them money and there's money in that account. So I thought I was smart. I opened up another bank account, took the rest of my money out. I went to another bank. I went to TD, opened up another bank. I said, let's go. I got another credit card over there. I thought I was on top of the game. And like I said, at 20, I got a call. It's a collection agency. So, me, once again, thinking I'm on top of the world, I'm talking slick to the lady, and she's like, you don't know what this is doing to your credit, sir. And the way she said that, I was like, what do you mean? And she said, this is hurting your credit. And at the time, I wasn't really aware of the effects of what bad credit can do for you. And I told her, I said, I already have another credit card. I don't really need to pay this one. She said, so you can't just arbitrarily pick which credit cards you want to pay. It's all in your name. And that's when it hit me. You want to protect your name, because, growing up, we had a hard time giving up our name and our birthplace because you didn't want to, your name was very important. And then when she said your name was being affected, I'm like, damn, man, last name first. My parents might find out about this now. Oh, this is getting intense. And so I asked her, what can I do? She told me you can get a free credit report. Every Canadian can get a free credit report once a year. And now they have these companies called Borrowell, Credit Karma. You could get your credit report easily.
Yeah.
And you can review what's on your credit history. What is your credit score? I repaired my credit score. So like I said, I didn't know what the effects was. I tried to get an apartment over on Keel Street. They said, yo, sir, your credit is so bad, you cannot get this apartment. I said, damn. I'm thinking I'm like, I'll pay cash. She says, sir, it's credit. So when it hit me, the world's changing. Yes, cash is king, but credit means something. What's in your name means something, whether it's a phone bill, a credit card, a loan, a parking ticket. You want to protect your name. Go look at a credit report. Sit down with your financial professional. Get the advice. And so I cleared those credit cards. I got a deal from the lady. I told her, I'm going to call you back. We exchanged numbers. We settled. I got the letter in the mail that it was cleared. And since that day, I never disrespected my name ever again.
Amazing. Wow. What a story.
Wow. Yeah.
Thank you for sharing those stories. And I hope those who are watching can relate. We have 2 more questions and then we're done. Let's make these ones quick as we're going through them. So really quickly, what sparked your interest in financial literacy and how has it shaped your professional career? What sparked your interest in financial literacy and how has it shaped your professional career? I'll start with you first.
An interaction I had in my neighborhood, we had to put money together to bail somebody out of jail. That was the first time I realized how much financial literacy really helped, because that money really saved this person's life and his future. And I realized if nobody had cash, if nobody had money, if nobody had any savings, he would still be in jail right now, fighting for his life and trying to get out. And so that was my first interaction with financial literacy at a young age.
Wow. I did not know that. So for me, I was just like a lot of people, right? Didn't know anything about money, and I became a client. So I attended a financial literacy workshop. I learned so much from that, and I was at a point in my life where I thought of myself as financially unattractive, not because of the age that I was, but just I was so dependent on my parents, and I really wanted to travel and just have some savings, and I was tired of being broke. And so once I was able, to get the help and, once I got a customized financial plan, my advisor was amazing, personable, kind, actually cared about me. And I made a really big change in about a year's time. She presented the opportunity for me to study, get my license, and become a financial educator. And at first I was like, nah, I'm good. I'm making good money. What I'm doing what I'm doing. And then I was like, you know what? If I do this, it's my way of making systemic change, because I'd always wanted to be a teacher, and I got the chance to be a substitute teacher in the Northwest Territories. And there was a lot of red tape. I couldn't even tutor students in the library. They said it was a conflict of interest. I didn't even want to get paid for it. I just wanted to help the students that were struggling. So doing this, because I'm self-employed, people can't tell me what to do. And I am educating people. So I do consider myself to be a teacher, and I'm teaching something that people really, really need. And so that fuels my career, because I know that I can actually make change in an area that is necessary.
Wow. Here's the last question in relation to that. So how do you define financial literacy and why is it so critical in today's world? Let's say, why is it so critical in Canada with the uprise of inflation? We'll start with you first, Shay.
Yes, that's pretty much the reason. Inflation, cost of living, and also too, I think a lot of people are relying on what the government gives us for retirement, and they don't know that it's not enough. It's not even going to cover the average rent. And so where are you going to get the other money from? Especially if you haven't thought about savings, you haven't been investing, you have a lot of debt, you still have a mortgage. We can't rely on the government to provide us with financial freedom. And so that's why it's important. And we also want to leave a legacy for our it doesn't have to be children. If we don't want to have kids, that's fine, but your family, right? Now, there's too many cycles of generational debt because nothing is changing, right? Our parents' habits are becoming our habits, are becoming our kids' habits. And so we really need to prioritize financial education so that we can be more financially comfortable and change the future.
Yes, sir.
I would say it's an opportunity I was blessed with in the summer of 2015. I work with the youth of my neighborhood for an organization called Tropicana
Oh, I used to work there.
Services.
Yes, I've
And so I
Hey.
help some youth get some job. And to be honest, I mean, I thought I was a hustler till I met the 12-year-old looking for a job. I was like,
I was a job developer, I know.
right? I'm like, damn, you're too young. I met countless youth who were telling me their stories, and they were so young. They're still in high school, beginning high school, and they're thinking about helping their families. At that age, you should be dreaming. And one thing I realized is that the educational system is taking away dreams from the youth.
Wow.
They're now more focused on paying bills and helping their mom and their dad than thinking about their own future and the greatness that they can become. This when I realized financial literacy, like Shay said, it's a generational trauma. The trauma from the parents is just being passed down. And so if we don't get to the youth at a young age, if we don't educate ourselves at a young age and start breaking that cycle, breaking that loop, and creating better habits and better relationships with regards to money, how we understand it, how we manage it, right? Like when you think about the hair industry is a billion-dollar industry. There's money in our community.
Yeah.
We just need to manage it and get on it. Yeah.
Amazing. Thank you both so much for being here. This is an opportunity now on the show to drop any final words, anything you want to promote, and let the people know where they can find you. Shay, we'll go ahead and start with you first.
Yes. So I just want to say that it does not cost you to speak to us. We offer complimentary consultations where we share more about what we do. We get to know you more so that we can start working on a financial plan. And we're both partnered with over 50 world-class companies that can provide you with financial products and services. So that's one way we're unique as well, because we're really focused on being accessible, right? You don't have to pay us to sit down with us and have a 20-minute conversation, right? We really want to focus on the community and educating and offering access to this information as much as possible. So don't be afraid to reach out. You know, the first step is asking for help, and that's really the hardest step. Once you take that step, we literally guide you to the next one. So please reach out and don't be afraid to ask questions.
Where can they find you?
Instagram, Finance for the Culture.
Awesome. Go ahead.
To piggyback on that, the brokerage that Shay and I represent is a world-class organization. Their affiliations to over 50 financial institutions allow us to provide our services at no cost to our clients. We're able to help everybody from all different walks of life and all different types of financial situations, as long as you are in Canada, of course. We are licensed here in Ontario, so if you're in Toronto or Ottawa, wherever you are watching this video right now, definitely reach out for your complimentary financial needs analysis to get a head start on your investing future and saving for your future.
Where can they find you?
Definitely find me on Instagram as well. And there's a link on there if you want to schedule an appointment to definitely see me. Or you can send me a DM, however it's convenient for you.
Awesome. Thank you, everyone who took the time to watch this episode. It's been a pleasure. Thank you both for being here. That is it for today's episode.
Thank you.
We are out.